Well, this is Vance. Monday, September the 28th, 2015. And these are the CL trades for today using the slow hand method for price action. Well, the U.S. market was off quite a bit. S&P 500 and as well as the S&Ps, as well as the Dow, as well as the Canadian market was down significantly today. Oil was off a little bit. From what we opened on from Friday, or when we opened on last night. 45. Let's call it the 45. Just a 45.39, 38. Dropped away 44. That was about 120 ticks. A buck 20. So what does that tell you? I think it tells me more than anything else if the equity markets are off, and usually they kind of run in tandem, that we're kind of close to the bottom as far as oil pricing is concerned. When the S&P falls that much and the Dow falls that much, and yet oil doesn't really fall that much. The fact of the matter is it was probably about the same level it was on Friday. I think we were a little bit near the bottom. Anyway, that's beside the point. The point is that I saw that maybe 3, maybe 4 trends / where prices were moving down. And so it was pretty straightforward from that perspective. We had this on the overnight, prices came down to around the 44. Well, let's call it, the low was at one time the low was 44.53, and then we had this kind of price came back up. I had this loose channel coming down here. You can see this is really near about 9:30. Here was the open. Here was at 9 o'clock, right around here. But I hadn't broken the channel that I had drawn off these bottoms. I really had them drawn off the bottom swings here. These three, 1, 2, 3. You can see that. And then I doubled it and moved it up to here. I guess the best fit would have been somewhere in that neighborhood, something like this maybe. But this right here is a second entry long, and it was at the low of the day. It would have worked had you taken that, but I didn't really like it at that time. It would have made its way up here, but after you had a strong move down there just prior to the open, or just at the open, I didn't know if prices were going to continue to fall off. So I wanted to see a cleaner break of this. And later on, about a half an hour later, prices stacked up here for about 30 minutes. And then when the equity markets opened, we had a kind of a push up right where at 9:30. So you can see, I thought this was a pretty decent trade. It was a second entry long off of this one. First entry pulled back, second entry long, and price rocketed up here. I thought it was going to test this high. It did. Went through there, pulled back there and down to this area. Now, I wanted to talk about this area specifically, and I've mentioned this in the past. This looks like prices came down here and it broke up, and then I marked this in green. But this is really a clear second entry long in a shorter time frame. And the thing is that, how would you know that? I know this because with this pullback right here on a shorter time frame, you would see a clear second entry long here. So if we went to a 400 tick chart, you would see that this pullback would make this a clean second entry long. So what I did was I took a snapshot of a 400 tick at the same area, and let me just kind of pull that up here, and I'll show this to you. Just a second, so I can get this, retrieve it, and I'll show what I'm talking about. Okay, let me show this to you. Oops. Close over. Okay, here's the 400 tick chart. Off the same chart, it's the same circle. This is 400 tick. So you can see price made this high here. Here's the first entries. Remember, it was a long tail over here. I'll just show it to you. If you look at it, see this long tail right here? Pulls back and comes back down to here. So look at this. Here's that long tail. Pulls back down to here. Second entry long. You can see that. Okay, that's what I mean. Now, I marked it in green because you can't see it on the 800 tick chart, but it's there, so it really takes a leap of that. And you see if you look at the 400 tick just quickly, this looks like a much better setup. A second entry long right here, first pullback, second pullback. I didn't quite like this one as much. It's off the EMA because it wasn't quite 15 ticks to this double top here, and that was kind of, when I was watching it, it wasn't really that clear, and then it stacks up right away, and that's something I wanted to chat about as well. When prices kind of stack up, in this case, it took a longer time to complete. This is 10:06. You're looking at 10:09, 10:11. So it's like 5 minutes later, and you just got 3 bars painted. Typically, what you want is on the 800 tick chart, if it doesn't break, or if your trade isn't going in your direction on the next bar, like with the bar after your entry bar, or or that bar, if it's not going decidedly in your direction, that's time to bail on that tick. I mean, don't wait 3-4 ticks unless you're on 3-4 bars. I mean, unless you get a significant entry into the bottom of the channel. But I didn't talk about that. In other words, if you're looking at making a trade on a second entry long in the direction that you're heading, it really has to really make a decent break within the first or second bar. Okay, after you get your entry. If it goes to overlap, it goes to 3 bars, you should be looking at closing it out. That's the best way I can describe it. Now, you might have to be quick on the draw in order to do that. Do you hold 3 bars? Like, I mean, look at it this way. I mean, you get in here. This is a second entry long in this chart. It's a pretty strong bar, but you have 1, 2, 3 bars that are kind of back and forth. But what's the time on this? This is 10:08. When let's say you enter on 10:08, and then you have 10:09. 10:11, so 3 minutes later, and by this time, 10:12, it does break higher, and you would have gotten out, but look where it is, like right at the top here, and it's like by the time this actually goes 10:13, so you're looking at 5-6 minutes in this trade, and it kind of this overlap. You may have considered holding through this. I didn't really like this because it's kind of too close to the top here. I found this one was better. It was really testing off this double bottom here. You see have this double or triple bottom actually. Price came back down in this area. It's off the EMA. It's off this trend channel here. I thought it was a better trade from that perspective. I mean, you could have limited in here. It didn't come straight up. It did close on its high, but it took a while for it to work out. And as you can see, this one, you see what I mean by the completing within the next bar or two. And then you're fine to hold on to it. We get break even +1, hold it up here. But as you can see, once it got past this, when it made close to the opening price, it started failing from here. Now, as you can see here, you had the first pullback. If this is second entry short right here, but it still isn't beyond this trend channel. As it turns out, if you would have taken a short at the top of this, if you could say that you're near enough to this top to take a short, I didn't really mark it. I guess I could have marked it in green because it's second entry short here. If you had the wherewithal to look at this particular trade, as long as your 15 ticks was above here, it would have been fine. But again, I was looking through here, looking to retrace, and didn't think it was quite close enough. I mean, if you're really aggressive, I guess you could put it up to here. Above the closes and try to get it above this as much as possible, I suppose. But I wasn't looking at it. Now, when price did fall off here, it breaks this short-term channel and then it fails again. So what I was looking at more than anything else was a measured move. And so the measured move, price comes back down to here. Now, I don't know if this is the pullback because, it's kind of a... pulls back you can see as I talked about this area because it's a long stem. It looks like rejection. So this might be enough like the double top on a shorter time frame to get into that. Price moves up, but it's only a first break. And so you probably want to wait for a test, which doesn't happen. This, by the way, is a second entry long off of this here. First entry, second entry long. But this was a real kind of a sucker trade because it continued to fall off. And when you have you have to look at another leg down someplace. Now, where did it actually occur? I was thinking maybe it was here, and then it kind of stacked up here, but it really turned out to be over here. When you draw this trade in here, this is where it really turned out to be. This is a second entry short. Now, I wanted to show this. This is something else I wanted to show. Talk about briefly. This line here. This trade here, you see, we break the channel. This is really kind of this is really like a failed second entry long right here, but it's again this stacking up here. It's really hanging up. There isn't really any support that's close by. But when price comes down to here, I think this almost looks like a measured move down, like a move within a move. So you can see that price came back down to here, pulls back first time, fails, pulls back the second time, and then fails. So it's like a measured move. Now, if you're thinking that this is the exhaustion and it looks like a turnaround, this is like a second entry short off of this one right here. First entry, pull back, second entry short. The problem is, and this is why I mark this, if you were to get in here, if you were to put in a buy stop order here, you can see when I'm talking about stacking, see what prices stacked up here? This is the first bar. Here's a second bar. It's a doji. This is closed on its low, another bar. So you can see these bars are stacking up. And so that's what I mean. If the price doesn't really move within the first or second bar, then it looks like a closing out. And it gives you an opportunity to close it out. So if you're looking at it from the perspective, it's not necessarily a terrible entry. But if you look at it from the perspective of saying, okay, this is 11:03. By the time it actually breaks up here, this is 11:16. It's 13 minutes of this. So I would say that you would close out of it. Now, and by the time you get a real good signal bar here, which looks like it's heading in your direction, it's really near the top of these and top of resistance. So you can't think of that as going to be a positive trade. Now, off of this low one here, this doji, you can see that this is a first entry. This is a second entry short on this little doji. Now, don't like to go second short on a doji like that. Now, once it breaks up through the EMA, and then we have another opportunity. So it's like this is like a failed second entry short that turned into that gave you another opportunity to get in on the second entry right here, and that looks more like the failure down. You see, here you go. First pullback failed. Second pullback hesitated a bit, and then you can see this is second. So we had the second. So I think this is the second. The first leg, second leg down with a move within a move. Anyway, it's a little bit difficult to see. I should have probably marked this in green. I marked it in red, but that's fine. You can understand what my explanation is. Price comes down in this area, and then it breaks the channel, comes down to a low. Again, I marked this one. It's at the end of the channel, again, with the double bottoms here. Looks like there's some support here. Might pull back in. There's a bit of room to get out to the other side of the channel, but it's an aggressive trade. I mean, there's no question about it. So, I mean, it would have worked where you get in, but it doesn't clear until over here. So when you go into this overlap here, do you hold on to this kind of trade? Nah, I don't think so. That's why I marked this one in green. It looks like a decent trade, depending on where you're limited in. But when you see the hesitation when it got to the EMA, I'd be looking at closing this one out. Look where it stacks up again. 11:36. By the time you actually break, it's 11:59. Do you hold in? No, you likely not hold in. So I just kind of marked this one up. I should have marked this in lavender. Just say there was a trade that didn't work. So this would probably be a scratch trade for me. In this case, resistance up here, second entry short. Pardon me, not second entry short. Double tops up here, and then there's failure. So that's one aspect of it. Like price comes up and then fails. But what I mean by there won't be a second entry short if you added these bars right here together from the negative standpoint. So you'd be like first entry pulls back if you added all these bars together, and pulls back again, and that would be the second entry right here. But a little hard to see. I marked this one in red, and the reason I marked this one in red is because now you've got this channel working down, some resistance here. I was thinking like another measured move, and this is the idea. So you get measured move through here. It might be a longer one. So you've got this one move down here. We see that price is reluctantly going up, and then a pretty decent bar. And in hindsight, what you can see now is that price did drop down here and did really touch. So it was, in fact, that measured move. Another strong bar off of this one. Again, the reason I would suggest these is that you limit in on these ones. Again, this bar right here, it rejects. Would you clear it off? I mean, when you look at it, would it have made it? Well, it depends where you got in. If you got in right as it closed, there's no way. But if you had limited it in somewhere in this neighborhood or put a blind trade here, you might have been okay. But again, that's kind of a difficulty. This is a little bit better from the perspective as far as entry is concerned. You could have entered right near these tops, giving you some room above here. Al Brooks, yeah, I mean, if you look at any of his material, when he talks about double tops in the direction of his trade, and if he's saying that this would look to him as this was, the trend is down. We got lower highs through here and lower lows through this area a majority of the time, because that's why price is moving down. If we don't have a majority of lower lows, price won't be trending down like this, and lower highs. So we wouldn't have this channel pointed in this direction. So his idea would be like you try to limit in near the tops of this tight trading range. He used to refer to it as bar wire. He doesn't talk about that anymore. But along to the top. He never used to trade these. But that would be an idea as far as resistance. But his idea was usually to limit in one tick above where this was, and so that you have the best opportunity to clear off if it turns in your direction. I don't necessarily do that. I like it. It's okay for me if I see this overlap near the outer ridge or the outer frame of this particular range. It doesn't have to be right at the other edge. You're probably best off is if you put your where the latest close was or the highest close was. That would probably be, because if it pokes through, then if it's heading your direction, it's going to resist. It's going to head in the opposite direction. if it's so inclined. It's not 100%. It's just tendencies that you can see on the chart. So as you can see here, it did fail. We did have that another measured move down here. Now, if you look at it from a channel standpoint, this is crooked. What am I doing here? Okay. All right. If you look at another channel, now we have another break, pulls back, and then again, this is like an aggressive trade from the double bottom, comes back, tests where these triple, quadruple slash tops were, and then fails off of here. So, I mean, it was really like a spike in channel. Now, from this perspective, you can see a little bit easier, but from a long range view out, if you kind of squeeze it down a bit, it's really like a big wide channel right through these closes here. So it's like from this perspective, I think you can kind of see that. So it kind of traded down with maybe a midpoint through here, but that's later on. This is later on in the day. So anyway, just a quick quick update as far as this is concerned. It's 15 minutes. I hope I give you some ideas in reference to that 400 tick chart. I just showed it. I mean, I don't go through that. I don't use that chart at all. I just wanted to show how I can see that the 400 tick chart. And if you look at it, for anytime you have these double tops or double bottoms, or you have these like these spike ups or spike downs like this, you'll see that this is the double bottom. You'll see price go down and come back up, and you'll see a green and a red bar virtually side by side. That's the way it works. You'll see that on the chart. 400 tick, obviously, these are going to be a lot wider. You're going to have double these. There's going to be twice as many, and I find that the going with a shorter time frame than 800 ticks gives too many false signals. On the 800 tick, anywhere from 8 to 12 entries a day. That's what I've seen. And you take a look back. Sometimes it's a little bit more, sometimes it's a little bit less, but anywhere from 8 to 12 really decent entries. And you can't get every one, but I think it's enough to stay on the right side of it. Anyway, that's it for now. This is Vance. Hope you enjoyed this. If you have any questions, please let me know. Got my email here. You can email me with any specific questions. Bye for now.